What's going on, everybody? It is I, the one, the only, with the one and only Kevin Burgess. I'm Russ. This is the Dapper Dividend podcast. And hey, this is the second time we're doing this. My guest has been so gracious to come back because yours truly recorded himself on the wrong microphone. It sounded awful. We can't have that for you. So, Kevin, once again, introduce yourself to everybody. Tell us who you are, when you got started in dividends, and why.
Well, that's great. So, Russ, first of all, thanks for having me on, and thanks for having me on again.
Mm-hmm.
Maybe we'll call that a dry run, so we can be a little briefer on this one. Maybe get straight to the point.
Let's
But
do it.
yeah, so a little background on me: I am retired, as many of you know, and retired about 2 years ago, and still have not run out of money. So that's a good thing. Um, I have, well, I guess my career was really built in the financial area. In the, I got a degree in accounting. Actually, my degree, Russ, was in economics and business with an emphasis in accounting because the college I went to didn't offer an accounting degree. You can have an emphasis in accounting, but I had to take economics classes as well.
Okay.
So that being that, I passed the CPA exam about 100 years ago, and maybe not quite that far, but so I had this financial background. My career has been in the financials. It's been in the accounting area mainly. I guess when I started, I was more of manufacturing accounting, but it ultimately ended up in the accounting. I would call it more technical accounting, where it's dealing with 10Qs, 10Ks, and then closed out my career in internal audit and risk. So that's kind of where I come from. So why dividend accounting or dividend accounting? Why
Yeah.
dividend investing? Yeah, I don't think we would keep anybody very long if I started talking about dividend accounting. So,
I'd be
but
interested, but yeah, I think for most people they wouldn't. But dude, yeah,
yeah,
dude, you've got the cred, you've got the street cred. I mean, that for most of us, like somebody like me, that's why it's crazy that we're sitting here talking about dividend investing. And as I make it very well known, I never went to college, and I just YouTube and on the fly learning and reading Warren Buffett and the greats and following great YouTube channels where you guys teach me things. So, yeah. So why dividends? What attracted you to dividend investing?
yeah. So what attracted me to dividend investing is, and I think of it really kind of like the first thing is it is hard to fake dividends. I mean, you can fake earnings as a company, but it is hard to fake dividends for very long because your cash flow statement, tells you how much cash you've got. And if you're borrowing money to pay dividends, that only lasts so long. So I like dividend investing because it is hard to fake dividends. That's kind of the main thing. The second thing, though, for me, and I don't know if you guys deal with this, but there's a lot of emotion that goes into investing, right? So you kind of pick a stock that you like, and you it's almost like you're kind of dating that stock, right? And then all of a sudden that stock goes way down, and you're like, man, I picked the wrong stock, right? And so there's a lot of emotion that goes into that. But when I have dividend stocks, I know that these businesses can't fake their cash flow. I know they have a good business. And so therefore I can ride that out. I can get those dividends, those sweet dividends that come in every quarter, and just let the market price move and flow as it's going to happen. So those are kind of the two big things for me, Russ, on dividend investing.
You remind me of the great Phil Esposito. You know who Phil Esposito is? I'm wondering, the hockey
I've
player.
heard the name. I
Okay.
can't.
I'm
I've
I'm
heard the name.
I'm a big hockey fan. So Phil Esposito, for those of you who don't know, played in the 60s, 70s, Hall of Fame hockey player, predominantly on the Boston Bruins, and he was from Sault Ste. Marie, Ontario, in Canada. So shout out, I got my Labatt Canadian shirt on, the one and only Canadian shirt I own. But the point of this is, when you talked about dividend investing allowing you to be kind of unemotional, you know, so Phil Esposito, he had a knock against him that, like his teammates said, whenever he had, we'll just say, relations with a girl, he fell in love with the girl. And that was his weakness. And that's been my weakness with investing, as I found out. I can't just date a stock. Every time I buy a stock, I end up falling in love with it and holding it forever. And a little bit of breaking news, buddy. Today, or it was yesterday. all these days run together. Yesterday, I sold Neo, the Chinese EV car company. I held that sucker.
Nice.
I bought it in September of 2018 when it IPO'd because they said it was going to be the Tesla of China. Held it all the way up until $70 a share almost. It was like 67 and change. I had been selling covered calls on it. We won't get into that, but just say I couldn't get out of the shares very easily. And then it was all the way back down to $7.50, where I ended up selling it yesterday. I was in initially at around $5 a share, so we didn't lose any money. But what a
That's
roller
good.
coaster ride for that. And that's the problem. That should have been a trade. And I just fall in love with stocks. So do you kind of get what I mean? Where it's almost as a dividend investor, once you locate a great company, you are just going to be rewarded the longer you hold on to that stock, especially if they, consistently grow their dividends. So thinking of that, what is something that you do, so you're going to marry these stocks or you want to hold on to them,
Hmm.
like what's Warren Buffett's favorite holding period forever. So what are some of the things
Right.
that you look at before you invest or while you're investing to keep tabs on these companies? What can you tell somebody that's just thinking about getting into dividend investing? What would be um, some things you would do or look at or use? Pray tell,
Yeah, no,
Kevin. Pray tell.
that's a great question. So first of all, congratulations and condolences on Neo. So you deserve both of those. But yeah, so what do I do when I guess for beginning investors, one of the things that I would suggest is you're really wanting to look for good businesses. So there's a couple of ways that people go about selecting stocks, right? Oh, there's more than a couple. There's 100 different ways, but I'll boil it down really into two main categories. Some people are looking for the stock price movement, and some people are looking at the business. And so when charting, you probably heard that, right?
Yep.
You're looking at the charts and you're looking to see when the head and shoulders are happening and all of this kind of stuff.
The
So that's
golden
one way of
doji,
looking at it.
the golden dojis, and the flying bears, and yeah, they got all those crazy
Yeah,
names. I
yeah,
learned some of them, and it's astronomy
exactly.
or no astrology.
Okay.
Yeah.
So then the other way is, which is what I do, is I actually try to understand the business. And so when I invest in a company, I'm not investing in whether I think the stock's going to go up tomorrow. I'm investing in a business, thinking that I believe in the business and that the business over the long term is going to do very well. So there's 5 things I look at, which I'll go through really quickly. The first thing is I look at their financials. So for me, financials are very important. And as I look at the financials, I want them to have a strong balance sheet, manageable debt levels, and good cash flow, et cetera, et cetera. So that kind of gives me a sense. That's really kind of my first look. And if they don't have good financials, I move on. I don't spend any more time on them. The second thing I look at is their capital allocation process. So as you know, there's only certain ways companies can spend their capital, right? They can buy equipment, or they can do dividends, or they can buy back shares, and there's probably a couple of others, but you get the point. So I look at that capital allocation process and I try to ascertain how well they do that. I want some going to dividends, but I also want some reinvested in the company, and even some, as long as the stock price is low, I really like to see stock buybacks. But that's really kind of hard to time, right? Because usually companies have a lot of cash when they're doing very well, and therefore their stock is doing very well. So you just have to look at at the timing of all that. So that's point number 2. And when I think of those two, Russ, I'm looking really at past performance, right? Because that's really all I have. I don't have the financial statements for 3 years from now. I only have the financial statements up to the current time. So
That
I'm
would be
looking at the
awesome.
past. I'm looking at trends. Oh, wouldn't it be great? It'd be like I'm sure there's some movies about that, and you would probably know that. But so that's the cost or the capital allocation and the financials are really kind of the past. And so the third thing I look at, kind of bringing it closer to home, is what is the stock worth? What is the business worth to me? So at business worth to me, I really like the discounted cash flow model where you're discounting back cash flows that you're expecting to happen in the future. As you know, Russ, these valuations can be um, a little, that can be a widespread between them. So you just have to kind of get a good gauge as to what you think the value of the company is. So that's the past and the present. But I'm not buying that when I buy a stock. I'm not buying the past, and I'm not buying the present. I'm buying the future. So the question for me then is, can they repeat that in the future? So for that, I look at two things. I look at the company's strategy and I look at the company's management team. When I look at the strategy, I want to make sure that I understand that strategy, and
Mhm.
that then from a management perspective, I want to get a flavor for whether they can pull it off. So that's the kind of the way I look at it, Russ. I look at the past, I look at the present, I look at the future, and then I make the best decision I can make and buy some shares or not.
Nice. So the cash
Yeah,
flow you're looking at, that's pretty important. You're looking at how they're
yeah,
spending that cash. With that's the past, and then the present is. Dude, I love the valuation, the discounted cash flow. Very awesome book by Joel Greenblatt. Trying to remember which one. I should be better prepared. I've read 3 of his books. I think it's The Big Secret for the Small Investor. Uh, Check the link below. I'll during when I'm editing, I'll put it in there. It's just I love it that you said that because a lot of us forget, and it's so easy to slip into looking at where a company has been and where they are
mm,
today. But as investors, we're investing through the windshield and we want as little uncertainty as possible. Perfect example. I listened to Starbucks is that doesn't sound right. I listened to this. I listened to the Starbucks earnings call, and they had a really good quarter, but their stock got clobbered because they didn't give any forward guidance, meaning they didn't give any projection on how they thought they are going to do in the future. And investors just want that certainty. And I think it's so funny because Berkshire Hathaway, Buffett, and Munger, they will never give any forward guidance on the company because they don't want to be be held to something that they don't know what the future is going to hold. So I think it's
mm.
just so cool that that you have that 5-step process. And so if something doesn't line up, if you find a reason to say no, is it just you just move on, you move on to the next one? Is that kind of it?
Yeah, I move on. There's a lot of stocks out there, and just to be clear, I really don't look a lot at guidance. I look at the
Hmm.
management team and the strategy, right? Because as you said, Starbucks, they um, came out with their guidance, which was kind of the same, right? They had
Yeah,
a blowout quarter, and then they said, "Oh, we're going to do the same for the year." And so what happens there is investors go, "Oh, what are you not telling me?" Right? So you had this great quarter, and it's better than we thought it was going to be when you were going to be here, and now you're still here. So that means some other quarter's got to be bad. So there's something you're not telling me. So it really
exactly.
gets rid of some trust, and so the new CEO at Starbucks, I believe, has learned a lesson today, and he won't make that mistake again. My guess.
Flaxman Narasimhan, I think. He was the CEO. I don't know if you know. He used to be the CEO of Reckitt Benckiser. European. They're kind of like a Procter and Gamble of Europe of sorts, or a Church
Okay,
and Dwight of Europe. They just have a lot of household products like that. And
gotcha.
yeah, so I wanted to ask you, where then would you look? Where do you find the management strategy at?
Yeah, so there's a couple of places I look. One of those is they will typically have some materials on their investor relations website. So whatever company you're researching, you go to that investor relations website, they will have presentations where they've presented to investors, or even their last earnings will have some slides, right, that typically that they put together. I will go through that and look for strategy. I look for what they believe their business is about, and what they're trying. For me, strategy is about what game am I playing and how am I going to win it, right?
Yeah.
So that's the strategy. And then I also would go to the 10K, and there is actually a strategy section in the 10K. Now it's passed through all the lawyers, right? So you have to kind of read that. You have to kind of pull things from between the lines a lot of times, but there's some good information in the 10K as well. So, but if by looking at both of those documents, if I don't understand the strategy, I move on, because first of all, I think I should be able to understand the strategy. I've been in that realm, right? And if I don't understand it, it's either that it's too complicated for me, or they are not very clear on their strategy. And so either way, I'm going to move on.
So I have a question for you. If all of this, if somebody's listening and they're like, dude, I don't really have the time for that. That just sounds way too complicated, but I still would like to be a dividend investor. What would you suggest if somebody had that disposition about things? Hi, that's a nice 50-cent word. Thank you. Hey, I just talked to myself. Did you just hear that? I had a conversation with myself. So that's the kind of fun stuff, hard hitting analysis you get here. Um, Anyways, so back on track. What would you tell somebody if they didn't want to analyze individual companies and they didn't want to put forth that effort?
Yeah, that's a great question, because I mean, if you don't want to do that, I really would question why you're really trying to pick individual stocks to begin with, right? Because that's what it's about. And so if you're not interested in that, what I would suggest is that you look into like exchange traded funds, some ETFs. There's some great dividend ETFs. I know SCHD is very popular in today's world. So if you're not interested in individual companies and researching all of that, and I get it. I mean, it takes a nerd, right? It takes a nerd to really enjoy that. And I am a self-proclaimed nerd, right? So I'll raise my hand. I used to wear glasses, by the way, until my surgery. So, and
Same
now I
here.
don't. So that's kind of cool.
Well,
Yeah. Oh yeah.
I have contacts, but yeah, I actually tweeted out today. I said, I used to listen to music all day long, and today I've listened to the Vici, the Starbucks, and the Lyondell Basel earnings reports. What's wrong with me? It's just, but that's me. And you, dude, you said it. Just ETFs. You can buy a basket of stocks. You don't even have to worry
Mhm.
about it. I've recently consolidated a lot of ancillary positions into SCHD. There was
Okay.
positions I held that I didn't even know the CEO. I didn't know anything about
Mhm.
them, but I was like, this. I didn't feel right about that, holding so many companies that I can't really tell you anything about them because it's been so long since I've looked at them. Actually, I did that today. I've been consolidating like a mofo. I sold Clorox because they were up almost $10 a share today at one point.
Crazy. Yeah.
So Clorox, little old Clorox, they have a PE of 50, which to me is just that's nutty. So
Yeah.
I had 7 shares in my Roth, and I was like, you know what, few buck gain. I just moved on, and I've been underwater on them for a long time. So today I finally got back to a little bit over even, and I was like, I'm going to take it. I think they're way overvalued. Looked at the chart, way overbought. I don't know who's going to keep buying. Like my PepsiCo keeps, another day, yawn, another all time high. I think 8 of the last 9 trading days, PepsiCo has set an all time high. It's insane. I was
Yeah.
like, okay, I guess they're curing cancer now with Doritos and Mountain Dew. But it was they're my core holding. I'm gonna keep holding them though. But it's all these value stocks were taking off. So that is
Maybe
that.
a follow-up
Yeah,
question. A follow-up
yeah, yeah.
question to that is, what if you're an investor and you've been investing either using charts or just trying to there's also a hope strategy, right, where you buy it and you hope it goes up, right? So maybe you've been following that strategy and you go, I want to try investigating companies. So what do I do, right? How do I get into that? If I don't know if I like it or not, right? So there's some that say, hey, I don't like that. They've tried it. They know they don't like it. There's some that are nerds like me that do like it. What about the ones that just don't know, right? And so I would say that I would use ETFs, but then I would pick one or two, maybe three at the most,
Yeah.
stocks that you connect with, right? And look around your house, see what you're using, what you're driving, whatever, and find something you're interested in, and research that one or two stocks, and in about 2 or 3 quarters, you will know whether you like it or not, and then you can move either way, right? You can go to ETFs, or you can kind of dive in to this area of researching stocks.
A lot of us are trying to get where you are. So, what
Hmm.
is it like living off dividends? I don't know. Do you have any issues? Are you taking all of your dividends? Are you reinvesting any of them?
Yeah, so that's a great question. I have multiple streams of income. So I have a pension, I also have rental income, and then I have dividend income. So at this point, I leave my dividend income until last, and so I have not needed that up to this point. I've lived on the other two, and then I get to reinvest my dividend earnings, dividend income, back into stocks. Now, I will say that I've got a little bit of a thing going on here where I've bought a house, we're remodeling it, and spending a ton of money on it. So I've been pulling out some of my after-tax funds to put in that house until we decide what we're going to do with that. So, but I'll be putting that back in pretty soon. So, but yeah, I
It's
can
it,
I can use that then for whatever I want.
it's nice that they're there, and
Yeah.
yeah, dude. We might be having a nice size remodel coming up ourselves,
Mm,
and I'm looking at my taxable account because I don't want to take out a HELOC, or, you know what I
right.
mean? Like, it's there, so it does stink having to sell stocks, but I mean, if it saves me from, like I said, just having to pay interest on a home equity line of credit, or putting a bunch of money on the credit card that I might not be able to pay off right away, it's there. That's what it's there for. It's a nice little, and it's an investment in our house. So that's
So about a week or so ago, Russ, I had some bills coming up for this house, right? And I sold my AT&T shares. The next day, it went whoosh.
oh,
It
you
was
yeah,
really
you got
cool.
see, you're smart. You got lucky. You're
Yeah, my
I
mom
can't
always said
quit
it's
AT.
better to be
It's
lucky than good.
Well, and I wish I would have had some of that luck, but I can't quit AT&T. I don't know what's wrong with me. I think I'm in a
Hmm.
cult. I might need
Yeah,
help. I think
might need counseling.
It's like Brokeback Mountain with me and T. I have this grand delusion that they're going to come back to $23 a share, and I'll get out happy singing with my money, get everything back. But we'll see. We'll see. That one's a work in progress. Is good old AT&T that a lot of us invested in, and yeah, if anybody goes to Seeking Alpha and you look at AT&T and T and you hit the charting tab, and it is insane the difference between Verizon, AT&T, and T-Mobile over 10 years. I think T-Mobile's up like 670%, and then
Right,
T's at like 20, and I think Verizon's at like 35 or 40%, something like that. And that's with dividends reinvested. And T-Mobile,
right.
by the way, doesn't pay a dividend. So yeah, that kind of makes you think. Do you have any non-dividend paying stocks that you own?
Yeah, I have one actually. I have Google. Google is my only non uh, non dividend paying stock.
Do you think they're going to pay a dividend sooner rather than later?
I don't know. I don't think so. Actually, I think they will continue to reinvest their earnings in the business, and because they've got a lot of competition now around AI and all of that. So it's not they're not as much of a monopoly almost in that space anymore. So I think they've got a bit of a challenge out there. So they're going to be really investing in R&D and growing that way. So I don't think so.
So one of the things that I wanted to talk talk out with the audience about, isn't that wonderful English? Thank you,
Hmm.
public school system in Cook County, Illinois. Um, I would like to know, what are some stocks that you are looking at buying the dip on. Get your chips, when they dip. What are two or three that you're waiting on right now that you think they're overvalued, but you would like to buy when they dip?
Yeah, so that's a good question. I really wasn't going there when I heard your question, but so let me come at it from the stocks that I am looking to buy at the moment, right? And then I'll come back to your question about what's overvalued right now and what would I want to come down. And So I'll give you a couple on the side of what am I buying now. One of them, and I bought it yesterday. I bought some shares of T. Rowe Price yesterday. They came
Oh,
down a lot yesterday, and so I've added to my position there. They're certainly in the top 10 of my portfolio, and I just added a few shares. I think 75. I bought 75 shares or so yesterday, so that was exciting for me, and another stock that I'm really looking at, and I actually own some of, but this one is a bit overvalued, so I'm waiting on it. So this really kind of goes to your question, which is Parker Hannifin, ticker symbol
ah,
PH. I just really like them. I bought some when they were really down, and then they came screaming back, and I just couldn't see adding more to the position at that point. So I'm looking for them to come down.
I don't terribly know much about Parker Hannifin, but in my line of work, they make hydraulic hoses, and I've
Yeah.
definitely used quite a bit of those hoses that Parker Hannifin makes.
Yeah, they make a bunch of things. So there's a couple of stocks that I've been looking at, Russ, and one of them that is perpetually high that I would love to own because I love their product, and that's Hershey's. I love chocolate, and Hershey's is forever
Ah,
just really overvalued in my view. So I can't really bring myself to buy Hershey, even though I would love to own some shares of Hershey. And the other one, which is actually it's actually, I believe, fair valued now. It hasn't been of late. I believe it's in the area of fair value. And we just bought a farm in Alabama. We've been, learning how to farm. And on this farm, I have, it's old McDonald, right? And on this farm, he
I was
has,
waiting. I was waiting, man.
is and
I
on this
love it.
farm I have a tractor, and that tractor is a John Deere tractor, and I would love to pick up some shares of John Deere, ticker symbol DE. I've looked at it recently. I do believe it's fair valued. Love their financials, love their capital allocation. I believe they have a deep moat, and so just waiting for that to come down a bit more, and then I may just pounce and pick up a few shares of John Deere. So what are you looking at, my friend?
Yeah, so John Deere, interesting. I know they're getting into AI, that they have
Mm-hmm. Mm-hmm.
technology that they're developing where the farmers don't even have to be on the tractor. They can just program it in
Right.
the computer, lay out the land, and it'll take care of everything. It's crazy because you think how many people used to be agrarian. I mean, the bulk of society used to work on
Right.
farms, and now it's just a couple people. So technology is
Mm-hmm.
amazing. But for me, you've been seeing me drink. It's not pink drink. This is my daughter's cup. It's just their old. It's the color changing cup. Starbucks. They're coming down now. As we had just talked about, I think I saw them at 103, 104 today, but it's
Mm-hmm.
hard because not too long ago, I was buying them in the $70 and $80 range. And I believe I picked up a few shares around 67. I think that's going back to October of 2022. Um, yeah, but honestly, I'm happy buying. I'm buying a lot of Nexstar Media. I think they're pretty undervalued right now. So I'm buying a lot of stocks that did dip, but I guess Microsoft is probably one I'd really like to see dip a lot. And
Yeah, that's
they
a good
are
one.
kind of like Hershey's, man. They're just always overvalued. And dude, it's like flash crash. Sometimes when they dip a bit, it's like a day or two, I swear it seems, and then it's like whoop, right back up. Did you miss it? I'd say Microsoft for me. Tractor Supply, you reminded me of that. I thought you were when you said
Mm-hmm.
tractor, ticker TSCO, Tractor Supply Company.
C, yeah,
They're
TSC.
they are fantastic, and I've shopped at their stores around here. And by the way, they don't sell tractors, so kind of a fun fact with them. And then Johnson and Johnson, I'd
Yeah,
like to see them in the 140s, and they're going to be IPOing here in any. By the time this comes out, it'll be right around the corner any day. Kenvue, their consumer health segment. So those are some of the ones that I'd be looking at. And it's funny because I put out two things. I put out a tweet that showed Apple 5 years ago in 2018 was around 40. This is split
Wow.
adjusted around 40 some dollars a share. Now it's what, 130,
100,
140? I don't even know. I don't, it's,
150 or so. Yeah. Oh,
yeah.
it's more
And
than that. It's like
so,
170.
and I'm sure there was people in 2018 saying like, that's pretty overvalued. So 5 years from now, are we going to look back and think it's overvalued? So that's probably another one. Apple always seems overvalued. But anyway, the point was going to be is that Warren Buffett, again, has always said that if you think a company is great and it's going to be around for a long time and making money for a long time, then don't wait to buy it. Don't try and time the market. Just invest in that business, like
Right.
just be done with it. So are you ready for some Twitter? I was going to say, you hold your peace. I'm like, wait, why would I say that? We got Twitter questions if you want
Oh,
to take a
wow. This is exciting.
stab
Yeah.
at
Shoot
them.
him at me, man. This will be like,
Live news. My
yeah, live and unrehearsed, right?
Well, it's I had Xfinity blowing up my account here or my phone because they're doing some work and I've been having Wi-Fi issues. So you gotta love it, man.
Okay.
Anyway, so here we go. We'll go through these kind of rapid fire. So Max says, "Do you prefer dollar cost averaging or lump sum investing?"
Yeah, and most of the time I will answer questions like this as it depends, right? And so um, I prefer for younger investors dollar cost averaging. And the reason is that you can kind of set it and forget it, right? You find companies that you want to buy, you buy them in the same dollar amount increments every time. So when the stock price is lower, you're buying more shares. When the stock price is higher, you're buying fewer shares. So your average cost over time is lower, right? And so I really like dollar cost averaging for younger investors. For me, that doesn't make a lot of sense. So I'm for instance, when I flip this house, right, I'm going to have a lump sum of money. I'm not going to dollar
Hmm,
cost average that in, right? So I'm going to
really?
take, no, I'm going to take, probably, I don't know what it'll be. Let's say it'll be 50 grand, right? I'll take 50 grand and I will put it in several stocks, but I'm not going to say, hey, over the next year, every week, I'm going to put in a certain amount of money, right? So I'm going to put in, I might pick like three different time periods to do it, but it's not, so it's kind of like a fake DCA, but yeah. So I think it depends. I think it depends on really where your portfolio is and whether, you're investing consistently every period. And if you are, DCA definitely the way to go.
I'm, I'm not sure if Morik knows who you are, but he says, and maybe you may be, and I don't know, why are you dropping so much money into VOO with all the banking problems going on right now?
I do have I said that earlier that using ETFs is a great way to kind of keep some work off your table, right? So what I have done is I've taken a
Yeah.
third of my portfolio and I have it in VOO, which is really a way to track the
Mhm.
S&P 500. So, I'm sure there are banks in there. It is not, however, a banking ETF. It is a S&P 500
Right.
ETF. So yeah, that's why I'm doing it is because I want to take some of that money that I have, some of my portfolio, because here's the thing to remember when you're retired. A lot of people think I'm gonna grow this fund until I retire, and then I'm gonna live off the income, and I'm gonna reinvest everything into income. But don't forget, you plan to live a lot longer than retirement date. So you're going to need money that's going to grow for you, not just your current income. So those are the funds that I have planned for the future, and so therefore I'm putting those in the S&P 500 and letting them grow over time. The other 2/3 of my portfolio are my dividend stocks. So he's in a
Nice.
Discord that I'm in, and so I have been
Okay.
posting out there what I buy, and so he's catching that.
Okay.
So it's a great question. I'm glad you asked it, but yeah, that's what's going on.
And then we have Vegetable Farmer 11. I love the names, man. This is so
Oh
fun.
yeah, I could be
It
Chicken
says,
Farmer 11.
Now, he says, "Are you into single stocks or ETFs?" I think we kind of answered that, but he said, "Do you plan on staying with single stocks or ETFs as you get deeper into retirement?"
So for me, I love this stuff. I love researching companies and strategies, and so I will always have some shares of individual companies, and at some point I may have all shares of individual companies. It just depends on
Really?
what my workload is. Yeah, so if I mean, I enjoy it. It's the only way I would get out of it is if I didn't enjoy it. I'm in retirement, man. I need to do what I enjoy, right? And so that's why I do what I do with these dividend stocks. It's because I enjoy it, and because of that, I'm not going to ever get out of it. At least I don't plan to, unless something happens.
Yeah, exactly, dude. That's so important, is what you said. Like, I think a lot of people think of retirement, and I used to, as you're either on the beach or you're playing golf every day
Mm,
until you die. And as I'm learning what I'm doing right now, what you're doing, we're learning to make a little bit of money talking and typing. Like, that's something I can do
yeah,
indefinitely. I mean, as long as I can talk and type. And soon it'll be just talk. You won't even have to type anymore.
that's right.
So I'm going to move these along because we could be here all night. James Coffee says Microsoft as a long-term dividend play? Question mark. So I guess he's asking, would you? I
Yes,
think that's a yes.
absolutely.
I think that's an easy
Yeah,
yes. Yeah. We
yeah,
just we
yeah.
just want to see it at a better valuation.
Yeah, Microsoft is in my portfolio. I'm trying to think of where it is. It's around number 6 or 7 in my portfolio. So I absolutely believe in Microsoft. I believe in their future, and I believe it's a good dividend growth stock to have over time. So yes, the answer is
Nice.
yes.
Dairyland Dividends. My guy up north in Wisconsin. Yeah, hater. He wants to know, do you have any holdings that you regret selling?
Mm. Wow, that's a good question. It's kind of like you love them and leave them, right? So I don't really spend time thinking about what I've sold, but I'm sure that there are. One will come to me in a few minutes, I'm sure. But because I mean, it goes both ways, right? Sometimes you buy stuff and it goes down, and those are the ones I remember, and the ones that
Mm-hmm.
I sell and they go skyrocketing up. Oh yeah, Kroger. Kroger is one. So I bought Kroger. God, it's been several years ago, but I bought Kroger when it was here, and then I thought this is not doing anything. And Buffett bought some, and it still didn't do anything. And so then I said, "Hey, I'm out." Right. And it was like a quarter later they just went. Shoop. so
Nice.
so
Yeah,
yeah,
that's
Kroger is one that I regret selling.
Hey, that's why I told everybody. I said, for all of you that are invested in Neo, I've been holding since 2018. So I decided to sell and exit the position. And then I just said rocket ship. So you're all welcome, because Neo is just guaranteed to just rocket up now. A couple more. Journeyman Portfolio says, any new position you're considering adding to your portfolio or considering selling out of?
Yeah, so I am absolutely considering John Deere that we talked about earlier. And as far as getting out of, I'm not looking at anything now getting out of. Everything right now I'm pretty happy with. So it doesn't mean that I think it's going to come back tomorrow, but I believe long term the things that I have in my portfolio I like a lot. And here lately, I've been really focused more on quality than on dividend income. So I've been buying these quality stocks like Microsoft, Johnson and Johnson, T. Rowe Price. So I've been
Yep.
looking to improve the quality of my portfolio during this bear market, and so that's been something that's been on my mind a lot. So
What bear market?
yeah,
I don't see any bear market. I'd love it to be back in a bear market. All right, two more. We got my buddy Harris Elliott, One Penny at a Time podcast, said, what was the first hobby or thing you picked up when you reached financial freedom?
oh yeah, that's great. So when I reached financial freedom, let me just kind of give some a backdrop to this, right? So I knew I was retiring, and I'd planned this retirement. We had a home in North Carolina. I was going to be there in the mountains. We had all these plans, right, for the future, and so I was picking up things. I was reading. I was doing this dividend investing, And at some point it became, what's the purpose? What's my purpose in life? So my suggestion would be, as you think about retirement, don't think about what you're going to do, but think about why you're going to do it. And so as we began to kind of work through that process, we felt that family was really our purpose. And so we have moved closer to one of our kids and a grandchild, and so all of this kind of works together into the purpose, right, of just family. So I would say that the first thing that I really realized that I missed was purpose. And so, yeah, I don't know
Man,
if that's a good answer, but
it is. You remind me of that saying that you should never be running away from something. You should be running to it.
yeah,
And if you're running away from something, you don't know what you're running towards, and it may be worse than what you're running away from. So I
right.
think that's so cool that you say that you should have a why. And there it is. Like that's a big why for you. And like we always say, man, you only have a set number of days on this spinning blue ball, and that's it. It's over. Um, if people are religious, they have other takes on that. But good question. Thanks for asking. Anyway, last one. Dissecting the markets says, how did he have the patience to do dividend growth investing? Did he love his job? Kind of answered it with that last one, but did you love your job?
Yeah, I enjoyed my job, but there was a lot of stress related to my job because my job was really about risk and internal audit. So at the end of the day, the thing that kept me up at night was not what I knew, but what I didn't know. It was about what was going on that I was not aware of and hadn't put the right process in place to find. Right, so that was a bit stressful. And while I enjoyed what I did, I loved the people that I worked with, but it was really about getting my stress level down and moving into something that is kind of cool. And so, purpose and then dividend growth investing are the things that I do now, and I enjoy them.
And chickens, you got chickens.
Chickens, yeah. Yeah, we've been growing chickens on the farm, and that's been kind of cool too. We've gotten our first eggs here a couple of months ago, so we haven't bought any eggs at the grocery store. My understanding is they're still a bit elevated in price. So, the cool thing is I'm just feeding birds, and they're giving me these what I call butt nuggets, every day. So.
Nice. Now I don't think I can ever eat eggs again. Do you feed them all the garbage, all the leftovers? I hear they eat anything.
Well, they don't eat everything, but they'll eat a lot, and so there's certain
Yeah.
things that we've learned that we shouldn't feed them, um, like what's it called? That makes guacamole, avocados. They
Yeah.
shouldn't eat avocados. There's certain things that
Uh-oh.
that are not good for them, but they will. They love that kind of stuff. They eat just about anything. But we also give them a balanced diet of feed that's nutritional for them, and but yeah, we do give them every morning. I go out. This is kind of a fun fact. Every morning I go out, I grab a handful of corn and I let them out of their run. We've got some that free range here on the property, and I throw that corn out there. And they, if I don't have that corn, they're like yelling at me, screaming at me. So I have to go get the corn and throw it out there, and then they leave me alone for the rest of the day. So they look
I'm,
forward to that
I'm
corn.
I'm telling you, you need to do it for your video. I'll be waiting. It's called "Am I Smarter Than a Chicken?" And what you should do is just you get a stock pick and then put
Yeah.
write down like 3 cards of stocks or 4 cards and put a piece of corn on each one and let the one chicken see which one it picks and then track that stock over the next couple weeks or something and see if
Yeah, it's not a bad
you
idea.
I hey, I swear to God, Kevin, I would watch that. I would watch Am I Smarter Than a Chicken? And
Yeah.
then, just to see what happened. But,
Okay. Well,
you
you're
know,
giving me an idea. I may have to look into that.
I don't know if it's ever been done before, but you got to think out of the box
Yeah,
sometimes.
that's true. That is right.
Anyway, so we made it, man. Thank you again
Awesome.
for coming and doing this and letting everybody hear your voice, the dulcet tones of our voices. I always like to say, I have so many weird things I talk about on the podcast and little jokes and whatnot, and I don't know where it comes from. But hey, like I was telling my buddy Harris there, it's like I'm with you. I didn't turn myself up to 10, but usually when I'm by myself, I want to entertain myself too. So I turn myself up to 10.
Hmm.
You know, it's not for everybody, but you're for everybody, Kevin. You're a man of the people. So where can the people find you?
So you can look for me on YouTube. It's my name. I always get that backwards, but it's right here. You can look for me there. Also, I have started a Instagram account, and the reason I like that is because it's a lot quicker. I can just put something out there, and people can see that, and we can create a relationship. Because what is the coolest part of all this, Russ, is not about dividend growth investing, but it's about the camaraderie and the people that I've met in
Here,
this
here.
process. So yeah, so cheers. Um,
I'll
you
drink
know,
my water to that.
yeah. So, I mean, the dividend growth investing community has some really, really cool people in it. And so, having, the guy that asked about VOO earlier, VOO
Mhm.
earlier, it's like, there's this crowd of people out there, and we enjoy talking about stocks and we enjoy helping each other. It's not a competition, it's about helping each other learn and grow. That is so cool. And that's why I like being part of the dividend growth investing community. So,
Exactly.
yeah.
Very well said, Kevin. Everybody, make sure I'll have the links in the show notes, in the channel description, video description, thingamajigger, whatever you want to call it at the bottom. Give him a follow. Talk to the man. If you have any questions, hit him
Yeah.
up on his Instagram account. Say hello. He likes it when people say hello. And same thing with me. You guys know me. Everything's in the bottom. We'll have a million links for you to find out. So, Kevin, thank you once again. I'm going to keep my fingers, toes, and eyes crossed that everything goes well and we're able to get this up and out to everybody.
Well, that's great, and Russ, I really appreciate being on your show. You're one of my favorite YouTube personalities. I watch every
Ah,
one of your shows. So really, I can't believe I'm sitting in the presence of greatness here with Dapper Dividends, Russ. So
hey,
this is
who
exciting.
who told you I'm susceptible to flattery? Come on now. Anyway, all right, everybody, we're going to leave it there, and I will see you in the next episode. Peace.